Hey, this is Danielle, and I'm the VP of Options at Simpler Trading. Welcome to today's episode of your Daily Five. I'm going to start off looking at some seasonality because it is September 26th, and the markets are down yet again. But I wanted to start with this because I think that it's really typical for the market to be down in September, and this graph demonstrates it perfectly. So in this graph, I threw in the QQQ. This is going to be the NASDAQ. I trade the NASDAQ products quite a bit, especially in the options market due to the volatility and high beta nature of the names. And so I pretty much always start off with the NASDAQ and the QQQs as it relates to my overall market analysis. So pulling up this graph, you can see that in September, only 20% of the time the QQQ is going to close higher than it opened from 2019 to 2023. So you can see that we're right on schedule with the QQQ having a weak month here. But I also want to point out, look at the seasonality in October, November, and December. Seasonally, 75% of the time, the Qs are going to close higher than what they open throughout October and then in November as well. And you know what is coming in October and November is earnings season. Then, of course, we have the Santa rally and the end of the year in December. So even though it's been a little bit weak, all hope is not lost. Next, I want to point out the sector spider ETF heat map. This is something that can be really helpful on days like today. It's always helpful to look at the individual sectors and kind of get a feel for, what is getting hit the worst. We have Caterpillar. This one's down 1.17%. The reason why that one's interesting is because that one has a daily squeeze. We have UPS, Honeywell, Union Pacific, a lot of these key industrial tickers. If you move on over here to healthcare, you can see healthcare is down as well, but nothing really too crazy. They're minimally trading minimally lower, except for this one right here, SYK. You got Berkshire down a little bit less than 1%. You have Visa down, JP Morgan Chase, pretty much red across the board, right? So if you look and you try to figure out, what's really getting hit the worst, you'll start to notice that you have Alphabet, which is down more than 2%. Anytime a stock is down less than 2%, it really can be just chop, consolidation. Not really anything too crazy going on, but once the stock is down, more than 2%, that's where it starts to get a little bit more dicey. So you do have Alphabet down. Meta is only down 1%, so not anything too crazy there just yet. But then you'll come over to this giant red box right here, and you'll notice that Amazon is down 3.31%. You've also got Microsoft that's down 2%, so just over that threshold, and Apple's almost down 2%. So just taking a look and seeing, what is the heat map telling us? Is this going to give us any kind of clues as far as where this thing is going to go? Let's go ahead and look at the individual charts. So starting off just with the QQQ, this is at a make or break zone. Here's the thing is that I have been looking for a potential short covering rally. I've also been looking for a rally going into October, but we're just not quite there yet. It's September 26th. As I mentioned, we have that weak seasonality. And obviously it's been weak, and I've been waiting for a buy spot and I haven't gotten it yet. So my question here is, am I going to get it, or is this thing going to roll over and die? Now, when you're looking at the cues, I have to say that this is the make or break moment right here. You can see that there's this area of support that's coming in at 355 essentially. And this is also going to be the low from August. So you're at this spot right now where, you could make a double bottom. You could hold right here and then we could rip higher on short covering and all would not be lost. And it would be a great buying opportunity going into October. But as of today, right here and now, the downside pressure looks like it's actually going to break. And so if it breaks, where is that going to lead us, right? Is the main question here. the thing that I really don't like about a break at this zone is that there's just not really any other support. So if it does break here, I mean, you have some minimal support here at 350, but I mean, that's not really, you just have a little bit of price consolidation. There's no critical moving average. I doubt there's any kind of crazy Fibonacci support with the way that this is broken down. And the main problem is that you don't have a major level until you get down into 328. So that would be a pretty significant fall for the QQQ. And of course, that would create quite a bit of pressure to the downside. If you look at the weekly chart in the Qs, you can see that this move right here is pretty symmetrical to this move. So it's still at the point where it's not that big of a deal, but I don't like how it's breaking through this critical moving average, which is the 21 EMA. A break of the 21 EMA on the weekly chart, it's really not a good sign. You do have a 34 EMA down here at 345, which is good because it's a little bit, that shows some support before you get all the way down to 328. But I just don't have anything very solid to give you as far as saying, hey, I think this is a great support zone. I wish I had it. If you look at even a higher time frame at the monthly chart, you can see that you basically rallied right up into this resistance zone and failed. And you have pretty swift reversal here that, again, if you break that 355 price point, which it's doing right now, you can expect to see this accelerate to the downside. So what about the spiders? What does this look like? Well, pretty similar. I think what I really like about the spiders here is that we have a monthly squeeze. Anytime you have a monthly consolidation signal, the problem is that you'll see, back and forth price action for weeks, if not months on end. The spider has actually been trading pretty nicely considering that it has a monthly squeeze. But what I don't like here, again, is that you're breaking through these lows, the low of this candle and this low of this candle. You're also breaking through that 8 EMA. If you go to the weekly chart, you can see that you're breaking symmetry. This was a pullback, and then this is a steeper pullback than this one right here, which is not really a good sign if you want to be long. And then if you flip down to the daily chart, this is where you can really start to see how you've broken down. So you've broken down below this support zone, which is right here. And at this point, we've broken through the lows from August and we've broken through these lows as well. So not really ideal in the fact that the spiders are picking up steam to the downside. If you can't hold this 425 price point, you do have some other support, just minimal support at 420, but the next level you're looking at is 415. So that's quite a ways lower, and I would not be surprised, if this broke and it flushed all the way down to there. So when I'm looking at the indexes, you really need to get a good view of what these top stocks are doing, especially the ones that have the most downside pressure, and say, all right, well, are these stocks going to shift patterns? What does this look like? Are they going to bring the indexes higher or lower? So starting off with Microsoft, which is now down 2%, you're testing 310 right now. If this breaks again, just like the Qs, you're looking at 294. So that could be a pretty quick flush all the way down into here. That would not be good for the S&P, would not be good for the Nasdaq, would not be good for Microsoft. So this is a level that you want to watch. If it does break, again, I would expect a quick flush. That being said, it's not completely toast yet. It's holding on. It's trying. It's down 2%. The put call ratio is high. There's still a shot here for a snapback rally, especially going into earnings in October when that seasonality improves. Now, what about Apple? Apple, same situation. You have Apple that's just clinging to this low from August. Apple has actually shifted into a downside trend, which is really not good for the NASDAQ and not good for Apple. You can see that you have the candles underneath these critical moving averages. Um, and well, in order for it to get back above it, you're going to need a major shift in momentum. You're going to need to see major catalysts, like, for example, earnings. But the thing about Apple is that last earnings season, the catalyst was earnings, and it was a negative catalyst, right? You had this big breakdown, and it shifted into a bearish trend, and it has yet to recover. Let's go ahead and look at Google. So, Google's one of the top stocks that I have been watching for a potential entry going into earnings in October. I was in the studio with Dave, I think last week, and I was talking about the fact that, you know, we have a couple stocks that are the most likely to trade higher going into earnings. That's Google, Amazon, and Meta. And I said at the time, these stocks statistically trade higher before earnings. That's what they do quarter over quarter, except for Q3. This one can tend to be the weakest one. And the problem is that if these stocks can't get it together, they're going to bring the entire market lower. So, at the time when Dave and I were filming, it was last week, right around here somewhere. And it was at a spot where it's like, it's make or break. Is this going to hold? Can we buy the dip or not? And the problem is that it's broken through these support zones and it's just continued lower. At this point, right around 125, 128, this is really the last line in the sand that it has. If it continues into this downward trend, I mean, we're not going to get a rally into earnings. And that would be a huge problem because when you look at Amazon, Google, and Meta, like these are the stocks that do historically have that move, right? And with Amazon in particular, Amazon is down the most out of all of these today. It's down 3.28%. And do you see how it's also broken through this critical support zone right here? Whenever you have a break of the 200 simple, that is just that is a death signal right there. Anytime you break a critical support zone and you have a big flush, I'm sure that's probably why it's down, 3% because it broke this major support zone. That is a bad sign for this stock. It's a bad sign for the market. And I mean, I really don't have, below this, I really don't have support until all the way down at 112. So when you're looking at this, um, you know, I can tell you that I can tell that you can easily see a quick flush from the 100 to the 200. And I'm sorry, I misspoke here. This is the 100 and this is the 200. So when you see a big break through this 100, you're most likely going to get a flush to this next support zone. So the 50, the 100, and the 200, those are going to be the, most critical support zones, I would say, as far as longer term moving averages. And when you get those breaks, it's pretty hard for the stock to end up holding up. So these are the main stocks that you need to watch today. Amazon in the break of the 100. You have Google, and it's just trying to hold up really above this 126, I would say. You have the 100 simple down here at 125. You have the 200 all the way down here. Hopefully we don't make it all the way down there, but I would say at least right down here at 125. You have Microsoft, and you also have Apple that are just kind of clinging. Microsoft's clinging to the August lows. With this one, you have your 200 down here at 294. And then looking at Apple, this one's already broken through most of its moving averages except for the 200. So 200 is going to be down here at 165, and it's clinging to those August lows. So those are all the critical support zones that you need to watch. If those break and we end up seeing, more stocks that are down more than 2%, especially on a break of those major zones, uh, look for more downside ahead. But you know what? I will tell you also that it We're seeing downside price action, which is pretty typical for September, as I mentioned, but don't forget that October and November are generally pretty strong. We have an earnings season coming up. I've been waiting for an opportunity to buy the dip on these stocks going into earnings. That opportunity is not here just yet, but I will be watching for it. And if and when price action shifts, I will let you know. So thank you very much. My name is Danielle. I'm the VP of Options at Simpler Trading. If you want to contact me or learn more, you can follow me on X, otherwise known as Twitter, at Trader Danielle. I hope you have a great rest of your day, and I'll see you in the next one.